What if I told you there's a formula to simple steps that has consistently beaten the world's most expensive hedge funds for decades? And what if I told you its creator didn't hide it in a Wall Street vault, ... He published it in a book for his kids. This isn't a fairy tale. This is the true story of Joel Greenblatt, a quiet professor at Columbia University, far removed from the bombast of corporate finance. Yet, for over a decade, his hedge fund delivered staggering 40% annualized returns. 40% year after year. While others struggled to match the market, Greenblatt was quietly, consistently dominating it. He was an enigma, a reclusive genius who cracked the code of Wall Street's chaos. But the greatest mystery wasn't how he did it, but why a man this successful, with a secret this powerful, would simply ... give it away. Greenblatt's journey didn't start with a magic formula. It began with a keen eye for what he called special situations. Imagine Wall Street as a bustling marketplace. Most investors are clamoring for the shiny new products, the latest tech, the obvious winners. But it was in the back alleys, sifting through the forgotten corners, looking for corporate discards. It was like financial archaeology. While everyone was chasing the hot new thing, Greenblatt was digging through corporate filings, looking for forgotten treasure. Things like corporate spin-offs, where a big company sheds a smaller, often overlooked division, or mergers, where the market often misprices the value of the acquired company. He saw opportunity where others saw only administrative clutter. He became a master detective, uncovering hidden value, and he made a fortune doing it. His special situations strategy was brilliant, undeniably so. But it was also complex, time-consuming, and required deep analytical dives. It wasn't something the average person could easily replicate. Greenblatt faced a challenge. How could he distill his genius? How could he bottle this lightning for the everyday investor? The teacher, the firefighter, the parent trying to save for their kid's future. He wanted to empower them, to give them a fighting chance against the Wall Street giants with their supercomputers and armies of analysts. He needed to simplify the chaos. The Eureka moment didn't come in a sudden flash, but through years of refining, experimenting, and relentless simplification. Greenblatt's core philosophy was elegantly simple. Invest in good businesses at cheap prices. But how do you systematically find them? How do you quantify good and cheap in a way that anyone could understand and apply? He broke it down into two fundamental questions. First, how do you find a good business? His answer: return on capital. Think of it like a highly efficient fruit stand. This fruit stand, with very little investment in equipment or inventory, makes a ton of profit. That's a high return on capital. It's a business that's incredibly good at turning its resources into money. It's productive, it's strong. Second, how do you buy it at a cheap price? His answer: earnings yield. Imagine finding that incredibly efficient fruit stand, the one making all that profit, suddenly on sale for half price. It's earnings yield. The profit a company generates relative to its stock price. It's how much bang you're getting for your buck. It's about value, and that was it. The secret weapon. Find the best businesses, and wait for them to go on sale. That was the magic formula. Dramatic pause. It was almost offensively simple, yet profoundly powerful. The back-tested results were decades of data showed the magic formula consistently, dramatically, beating the broader market and even the most seasoned professionals. It wasn't a fluke. It was a systemic advantage, hiding in plain sight. So, if it's so simple and effective, why isn't everyone a billionaire? This is the paradox, and it's where human nature butts heads with mathematical brilliance. The formula works. But here's the catch. It requires patience, true unwavering long-term patience. The magic formula will inevitably, at times, underperform. For a year or even two, it might look like it's failing. And that's where most people panic. Their emotions take over. They abandon the strategy just before it's about to soar again. Wall Street professionals are no different, perhaps even worse. Their jobs depend on short-term results. A year of underperformance, even if it's part of a winning long-term strategy, can get them fired. The formula works. The hard part is you. The magic isn't just in the numbers. It's in the discipline to trust them when your own brain is screaming at you to sell. Greenblatt understood this psychological hurdle, and he built a formula that works despite it, for those who have the fortitude to stick with it. His goal wasn't just to make money. It was to empower, to educate. He leveled the playing field, giving the common investor a powerful weapon against Wall Street's Goliaths. Greenblatt taught us that the market isn't a casino to be gambled in, but a system that can be understood. He gave us a map. He showed us that with logic and patience, anyone can challenge the experts. The real magic formula isn't just about buying stocks. It's a philosophy. Look for quality and wait for the right price. Whether you're investing in a company, a home, or yourself. So my question for you is, what's the most important special situation you're looking at in your own life? What quality opportunities are you waiting for the right price to invest in? Let me know in the comments below. And if you want more stories about the hidden geniuses who changed the world with a single, powerful idea, make sure you subscribe, because the best ideas are often the ones hiding in plain sight.